Good afternoon, traders and investors. Will back here with another one, coming to you with a Tuesday market update. Hope everybody had a beautiful day. And in today's markets, guys, well, what started off as a fairly muted day on the morning. Take a look at the SPY here on your hourly chart. First couple of hours were indeed fairly muted. And then, unfortunately, it all unraveled. So that was due to two key events. Number one, we got a jobs report in the morning that showed that workers were actually making more than expected. So in terms of your month-over-month wage growth, it was actually quite positive. So people are making more money from their jobs. However, that's a double-edged sword. That's very good for the economy and good for the consumer, but it does increase inflation pressures ever so slightly. So after that report, once again, people were estimating that Jerome Powell may just not be kind to us in his testimony tomorrow when he delivers us the Federal Reserve interest rate decision tomorrow at 2:30 p.m. And then, of course, the second piece of news that happened over the course of the day that really led to the waterfall drop is some Israel and Palestine tensions. There's a hostage negotiation deal underway, and unfortunately, Israel said that it would proceed to launch a potential attack on the city of Rafah in Palestine, regardless of the hostage situation. So that obviously, those increased geopolitical tensions and more inflation and uncertainty really led traders to take money off of the table prior to tomorrow's Federal Reserve meeting. So all that combined, guys, led us to have a quite red day indeed. SPY down 1.58%, QQQ down 1.89%. Really nothing was spared across the board here today, guys. So in today's video, we're going to take a look at exactly how we stand in terms of our markets. Number one, we're going to take a look at a few company earnings in a rapid fire style. So I'm going to be going through as many of these as possible. We're going to be taking a look at PayPal, Amazon, AMD, Supermicro, Starbucks, and slightly take a look at McDonald's and Coca-Cola. All at the same time, we're going to take a brief look into those companies and see what they delivered in terms of our earnings. Then, of course, we're going to take a deep dive into our technical analysis, guys. We have the monthly closes. The last trading day of April was today. So we'll take a look at our major technical analysis rundown on indexes and big tech names and include the monthly candle charts to see how our long-term bulls are shaping up in this current market environment. And then lastly, take a look into my portfolio and see the trades that I made today for the tomorrow session. So without further ado, guys, a lot to cover today. Let's get right into it. So SPY, QQQ, obviously very red on the day. Nothing was spared. You can see that best on the heat map, guys. Really red day in the markets. It started off fairly mixed and muted, but really unraveled over the course of the day. Nothing truly being spared except for Eli Lilly, which had earnings this morning. They did quite good in terms of healthcare, but the rest of the market, guys, really not having that great of a day. A lot of fear and uncertainty surrounding tomorrow's interest rate decision with Jerome Powell. Will he push rates higher for longer? Well, that has come to be expected by now, guys. He's been saying that pretty much for the past 3, 4, 5, even 6 months at this point, right? Just a quick reminder, starting last October, everybody was trying to get rate cuts for January. And then when he pushed them back, everybody was saying March. And then when he pushed them back again, everybody was saying May and then June. And now we're pretty much towards the end of the year, guys. The market right now is only pricing in one rate cut for the end of the year. And a lot of analysts are saying potentially no rate cuts for the year. So we have a lot of pricing down effect happening in the markets right now. A lot of this rally that we've had since the month of October and November, guys, yes, it has been predicated on interest rates coming down, but there was also a huge AI narrative that is kind of dwindled now over the past month and a half as uncertainty has kind of replaced the bullishness of that narrative. And that uncertainty is once again around interest rates, inflation, and now geopolitical tension. So a lot that we're dealing with in this current market environment. Now, in terms of the rest of our earnings, however, we do have good company earnings for the rest of the week. It is not finished yet. Tomorrow, we do get to hear from MasterCard. That's going to be a good one. And we get to hear from Qualcomm, another one of our large semiconductor players. And then on Thursday, another very big day, guys, because Apple is going to report earnings. That's going to be a very important session. Apple's been trading down significantly since the start of the year. So will this be their redemption earnings, or will it just be a last catalyst to potentially sell the stock off even further? We'll take a look at that, guys, prior to the earnings in tomorrow's video, do a little preamble to those earnings. So before we get into our technical analysis here, guys, let's do a little bit of a deep dive into company earnings in rapid form. I'm going to do this a little bit differently, guys. Going to spend only a few minutes per company, give you guys the general sense of what happened with these companies, and then give a few valuations and where we stand on the technicals. So let's get right into that portion of the video. So let's start it off here, guys. We're going to go through McDonald's and Coca-Cola first, all right? So we're not going to go through their earnings calls. I just want to show you guys what happened, okay? So McDonald's has been trading down here for a better part of the early portion of the year because consumer discretionary spending has been down. Low-income households and even middle-class households have been quite pinched because of the increases in prices due to inflation, and that is not the first time that these companies have told us that it's been a problem for them. McDonald's has been telling us this for about 3 quarters in a row now. Coca-Cola has been saying this as well. Pepsi literally just told us this, the same thing last week, and it did not stop for McDonald's either. So take a look at the stock here today. McDonald's actually had a loss on EPS, so they missed on EPS, but they did beat on revenue. But the gist of the earnings call was the fact that once again, they are issuing fairly soft guidance because of the fact that consumers are pinched. So once again, discretionary income hurting McDonald's stock as a whole. McDonald's, when they opened the morning, were actually down about 3.36%, which was the expected move before traders bid the stock back up. McDonald's as a whole, guys, coming into a very juicy area of support, 265 down to about 258. But this stock, even if it is one of the strongest companies in the world, and even if it is in a nice monthly uptrend here, there's just a lot of uncertainty around discretionary spending. So we're not really expecting McDonald's to get back to that growth story and consistent beat story that they have been able to do here, guys, in the past, 3, 4, 5, 6, 7 years. Now it's a little bit more of a challenging environment for them. And that was actually reiterated by Coca-Cola stock today as well, similar to their direct competitor Pepsi, which gave us a glimpse into this last week. So Coca-Cola, their story about consumer discretionary income coming down started all the way back here last year, about midway through the summer. That led to this cascade waterfall drop, and they've been dealing with these problems ever since. But Coca-Cola is a very strong company, and they still do find ways to beat on their current quarters. So EPS was actually up 3.25%, revenue was up 2.66%, but once again, the gist of the earnings was once again weak guidance for the remainder of the year because consumers are shopping for sales, shopping for bargains, and not willing to pay full price for items anymore. So a lot of Coca-Cola's sales now has to be on discounted and liquidation price items, and they're just not delivering the same growth that they once were. Take a look at the stock here today. Although the stock didn't drop that much after the earnings call, it didn't really move to the upside either. All of the gains were quickly erased and then some throughout the day. Now, Coca-Cola, I do believe that Coca-Cola is a great buy down here in the $59 to $58 range, but similar to McDonald's, guys, you may have to be patient with this one if you choose to invest in this stock until the consumer regains that discretionary income. And that is not something that happens with a snap of a finger. Usually that does take some time, which is why a lot of these discretionary income plays are going to be out of favor for the considerable next few quarters at least here, guys. So just keep your eye on this whole niche of stocks. Anything consumer discretionary, guys, think of Starbucks, Nike, McDonald's, Coca-Cola, Pepsi, right? All of those are going to have a very difficult time over the course of the year. We're not expecting tremendous losses by these companies, but then again, we're not really expecting tremendous growth either. All that being said, guys, leads us in to the next one of that consumer discretionary cycle, which is going to be Starbucks. And Starbucks, guys, had an absolute disaster on earnings today. Take a look at this drop in the after hours. Starbucks down pretty much 12, almost 13% before ending around 11% negative in the after hours. Very brutal move down by Starbucks. So what exactly happened? Well, they missed on everything, but not just a little bit, guys. They missed a lot. Big miss on EPS here by about 15%. Huge miss on revenue by about 6%. Usually Starbucks doesn't miss by that much. I mean, we are coming up quickly now, since the stock is trading into the $78 range, we're coming into the last 3 years worth of lows, right? These are almost the COVID lows. These are the May 2022 absolute market crush lows. And we're kind of back there again. So Starbucks hasn't really done much in the past 3 years. Now let's take a look at a few of the highlights, guys, and you'll see they are really, really not pretty at all. So let's take a look at Starbucks real quick. I have this tweet up right now because I just want to illustrate the numbers and how bad they were for this company. So we took a quick glance on the EPS miss. 8% year over year, revenue down 2% year over year. Look at these comparable stores. Global down 4% when the estimate was up 1.5%. We always knew that Starbucks had a problem with growth, and they tapered back their growth expectations from mid-single digits to low single digits, which was this, but we'd never expected them to go negative. Huge negative miss here. North America down 3%. Estimate was 2% to the upside. International down 6%. The estimate was low single digits. China down 11%. The estimate was for negative low single digits. Now, take a look at this here as well. Net income, their bottom line profit down 15% year over year. That's absolutely terrible. And let's take a look here down, right? In terms of your North America segments, we already covered them very briefly here, but I just want to show you guys how bad this actually was, right? Operating income in North America down 6%, their margins down 19.1%. International wasn't any better, right? Net revenue 5%, operating income down 26%, their margins down from 17% to 13.3%. Absolutely atrocious metrics by Starbucks. What did their CEO have to say about this? Well, in a highly challenged environment, this quarter's results do not reflect the power of our brand or capabilities. We have a clear path to execute, and we remain confident in our long-term strategy, which will deliver on the limitless potential of this brand. So it's not really addressing the concerns, just acknowledging that they're in a highly challenging environment now, not really giving us steps that the company's going to take to address these concerns, right? Here's what the CFO had to say. While it was a difficult quarter, we learned from our underperformance and sharpened our focus with a comprehensive roadmap of actions. We remain committed to our disciplined capital allocation approach. So they say they have a roadmap, but they didn't really give investors these steps as to the roadmap, and that would have really helped Wall Street understand the challenges that the brand is facing. The challenges that the brand is facing is very, very simple. Their China expansion is quite underwhelming right now because, quite frankly, China is in a recession, and consumers in China don't necessarily have the same amount of disposable income as in the US. So if you think that the disposable income in the US is low, China's disposable income is even lower, unfortunately, right? So China expansion, not going very well for them right now. Is it a Starbucks problem? No, it's an overall economy problem, right? Number two, well, unfortunately, guys, it is their political involvement. You guys may know that last October, unfortunately, rumors started circulating that Starbucks was promoting one country that's currently in a bit of a tension right now with another country, right? I'm not going to name them. But yeah, Starbucks was kind of choosing sides, and it led to them being boycotted by a lot of people. So they've been having to do a lot of PR, a lot of damage control to counteract that. So on one side, you have unfavorable brand reputation right now for Starbucks, and on the other side, you have low consumer disposable income. Very tough for people that are just getting by right now with the elevated cost of food prices and gasoline and stuff like that to go out there and pay $5, $6, $7, $8 for a cup of coffee. So those are just a few of the issues that Starbucks is dealing with. Definitely not a great quarter for them. And if you think they're cheap because the stock sold off, well, think again, guys, because even though the share price came down, unfortunately, their EPS is coming down as well, right? Take a look down here. We can take a look at the forecast, right? Take a look at your EPS. EPS largely, I mean, it is supposed to grow in 2024, but now that they've tapered back the expectations of growth, they said that, whereas before they were expecting a growth of between 7 to 9% for the year, now it's going to be low single digits. So this is going to be revised to the downside. You may not see any EPS growth for Starbucks this entire year. And couple that with the fact that even revenue is kind of struggling here for the year of 2024. So we'll see if they can turn that around for next year, but definitely this year, guys, just an unfavorable trade as a whole. And we can even see that by their financial metrics right here. In terms of your 2024 forward PE at $80, which is the after earnings price, it's about a 21, and it gives them a PEG ratio, their PE as a relation to their growth of 1.62. 1.62 is not that cheap. Under 1 would be very, very cheap, but at 1.62, it's really not that cheap. To give you guys an idea, Facebook stock, right? Facebook stock, the fun thing about a PEG ratio is that we can compare all these companies on a common denominator. It's really easy. It's their share price as an expression of how much they're going to grow in the future. Look at Facebook, even close to the all-time highs, their PEG is a 1.37. So Starbucks being crushed from the all-time highs right now at this point, 40%, they're still more expensive than Facebook on a relative valuation basis. So it just goes to show, guys, This trade, in my opinion, although it does represent a decent buying opportunity, similar to Coke, similar to McDonald's, this trade, similar to Nike as well, this trade is just not ready, guys, and it will take some time to turn around. Just an unfavorable segment of the market right now, so quite a shame with Starbucks indeed. I did write a few options on Starbucks at the 80 and 81 and $80 range before earnings. I did not think they were going to miss this much, and I'll be closing that position tomorrow happily, just because I mean, it's very high. It's very tough for me to have high conviction in a company that literally just revised its entire guidance for the year to the downside, to basically say that they're not going to grow at all and that the challenges remain in front of them. So unfortunately, day for Starbucks. Now let's get into a little bit more of a fun topic here. And now we're going to go through AMD and Supermicro. So before we get to the big ones, Amazon and PayPal, right? So AMD had a somewhat of a decent quarter, but they came in a little bit light on guidance. So AMD had already been struggling to start off this year. As a matter of fact, they were already down 30%, and the after hours earnings session did not help them at all, guys. Down an additional 8% in the after hours, now down to about 147. So what exactly happened? Well, they did beat on EPS, but they came in slightly shy on revenue. But the reason for the drop was not there. It was in their guidance. So let's take a look at some of that guidance here, guys, right? So AMD investors pull back after modest Q1 beat, lukewarm guidance. CEO touts AI chip ramp up. So let's take a look at their segments of their business and see how they're doing. The stock retreated in after hours trading, likely due to second quarter revenue guidance that fell short of consensus estimates on the low end. Now, let's take a look, guys, at their different, their lines of business, right? So in terms of the revenue actually came in above the consensus, which was decent, 2% year-over-year change, but they did have a loss on quarter-over-quarter. Q4 of last year was a very good year for AMD. Non-GAAP EPS also beat, but did come in lighter than last quarter as well. Let's dive in further to the article. And here's what Lisa Su, the CEO, had to say about this. We delivered strong first quarter results with our data center and client segments, each growing more than 80% year-over-year, driven by the ramp of MI300 AI accelerator shipments. This is the competitive product to the NVIDIA H100s, right? The data center GPUs. And the adoption of our Ryzen and EPYC processors. That's for more of their client segment, right? Think of client computing, the chips that you may have in your computer. Now, here's what she continued to say. This is an incredibly exciting time for the industry as widespread deployment of AI is driving demand for significantly more compute across a broad range of markets. We are executing very well as we ramp our data center business and enable AI capabilities across our product portfolio. Well, that's all fun and games, guys, but the business is just not doing streamlined growth. Their data center, the one that's competing with NVIDIA right now, that is growing very well. That is now 42% of AMD's total revenue, $2.3 billion over the quarter. Year-over-year growth was good, 80%. Quarter over quarter, though, not that fantastic, 2%. Just goes to show, guys, ASML and TSMC, when they were talking about a slight semiconductor slowdown in the first half of 2024, that is most likely what is affecting this company as well. Their client segment, so what chips you may have in your computer, right? That's not their graphics cards, that's the gaming segment. So their chips, that was 26% of their total revenue. Good year-over-year growth, 85%. But quarter over quarter, again, loss of 6% versus the December quarter. So this is good, but quarter over quarter, still not seeing that consistent EPS growth, right? Or revenue growth on a quarter over quarter basis. Now, here we get into the problem segments. Graphics cards, 17% of total revenue. Year-over-year growth, 48% to the downside. Quarter over quarter, 33% to the downside. Not very good. Their embedded segment, this is their commercial and industrial applications of their chips. So these are the ones that you may find in factory computers or factory machinery, stuff like that, right? Really big commercial applications. And that segment as well, 15% of total revenue, year-over-year growth, 46% to the downside, and quarter over quarter, 20%. So it just goes to show you guys, AMD is doing good in the highest percentage of total revenue segment of their business, the one that's having the most expansion right now. Client segment's doing good, but these two segments, guys, are really lagging behind hard, and it just doesn't show that a company that's firing across all lines of business simultaneously. So that's why AMD stock is probably suffering a little bit too. The next reason is the guidance. Now, the guidance wasn't that bad, but as I've told you guys before, this earnings cycle is going to be one of either perfection or nothing. If they don't provide perfect results and perfect guidance, these stocks have run up a lot and they will be sold off. And this one was pretty much the same. AMD guided to second quarter revenue of $5.7 billion, plus or minus $300 million, which is nothing. It's not even 1% difference, right? Now, the estimate was 5.7 flat, no plus or minus. So for that less than 1% potential, they said plus or minus. They didn't say minus 300 million, right? For that potential less than 1% miss, well, AMD stocks now down 8% in the after hours. Not very good, is it? Analysts are optimistic the company will rise over the next year. The average AMD analyst price target is about 204, suggesting 27% upside. So not a very good day for AMD. They're down to about 145, now down about 36% year over year. Not that good of a day for them, and really not that great of a start to the year either. So let's take a look at a few of their growth metrics. Well, in terms of their EPS growth for the next 3 years, that is fantastic. Take a look down here, guys, right? This company will be growing, but more likely growing more heavily in the tail end of 2024. That's what a lot of semiconductor companies have told us to begin with starting last quarter. So the EPS ramp really starts 2025 onto the future, and revenue as well really accelerates 2025 and beyond too. So the company's healthy, just going through a little bit of a lull right now. Where does that stand for them with valuation? Well, in terms of their forward 2024 PE at $148, their current price right now, roughly, that's about a 40.5. Seems high, but that's why we take this in relation to their high growth rate. It gives them a PEG ratio of about 1.16. That's actually not that bad. If AMD were to pull back even further, 140 to 130, this should get this ratio closer to 1, which would be a very decent buying opportunity for a company that has so much growth ahead of it. So temporary struggles for AMD, but they should find the redemption in the later part of this year. Now, let's get into another semiconductor name that we had today. We're going to go through SMCI. So SMCI, another company that unfortunately, after their earnings, coming down significantly, right? Take a look at this, currently trading about 10.5% to the downside in the after hours, but went all the way as low as about 16%. Did they have a tremendous earnings beat? No, not really either. Just goes to show you how precarious this earnings season is, right? If companies aren't perfect and raising guidance significantly, they are getting hit to the downside because a lot of these companies have run tremendously since the start of the year. So they have to justify that growth. Now, in terms of their earnings, 15.76% beat on EPS. Very, very good, but a slight little miss on revenue by about 2.6%. It wasn't that bad at all, guys. This is a company that has tremendous growth ahead of it. Take a look at this fantastic EPS growth for the next 3 years, and take a look at this fantastic revenue growth also for the next 3 years. So what happened? What caused them to drop significantly in the after hours today? Well, let's take a look at the article right here, guys. Supermicro pushes up full year revenue forecast as it points to strong AI demand. Doesn't really sound like a company that should be down over 10% in the after hours, right? Well, here's the gist of things. Supermicro shares slipped as much as 15% in an extended trading on Tuesday after the server maker reported slightly lower revenue than expected for its fiscal third quarter, even as it gave optimistic top-line guidance. Supermicro is bumping up its fiscal 2024 revenue guidance to $14.7 billion to $15.1 billion from 14.3 to 14.7. Very, very, very decent revenue bump for them. That's about a 5% bump across the board for the entire year. Very good. Here's what the CEO had to say. We are growing customer base strongly now. Right? Very short quote by the CEO. Notwithstanding the after hours move, Supermicro stock is up 205% so far this year, while the S&P has only gained 6%. That is one of the reasons, guys, if they don't show perfection, well, they're going to have to bite the bullet on that because they are outperforming the S&P and they have to justify those gains. If not for a key component shortage, Supermicro would have delivered more during the quarter, Liang said on the call. He expects AI growth to remain strong for many quarters, if not years to come. Supermicro's supply chain continues to improve, said the finance chief officer David Wiegand. The company is eager to sell liquid-cooled servers that can result in lower energy costs than air-cooled alternatives. So they're working on things in the pipeline. Their demand remains strong, but just because they missed on this quarterly revenue by a tiny little bit, 2.5%, they are now down 11% in the after hours. Where does that put them in value in terms of valuation here, guys? Well, Supermicro, in terms of our support levels, you guys know that the last remaining support is down here at about 683. But where do they stand at their current price in terms of the after hours at 770? Well, it's actually not that bad. So keep it in mind, the company's growing extremely well, EPS growth of 28% every single year for the next 3 years. That gives them a 2024 forward PE ratio of about 35.2, which is not all that bad, especially when you compare it with their growth rate. That gives them a PEG ratio of 1.26. For a company that's growing so fast and so much, that's actually not that bad. As a matter of fact, considering the fact that they're, not that far off the all-time highs and they've run significantly, even this company is technically speaking cheaper than Starbucks, right? So not looking too bad for Supermicro, but just the entire semiconductor industry right now, just going through a little bit of an unfavorable period, right? This is a very, very hot trade back then. It required some extended consolidation for these charts to make sense. And now we're getting that extended consolidation. There's nothing wrong with these companies. It's just healthy consolidation as a whole after a huge start to the year and a continued rally since pretty much last November, right? So that's pretty much it for your Supermicro. And now we only have pretty much 2 remaining. So we're going to cover these fairly quickly. I apologize for these earnings, guys. I'm going through these as quickly as I can to really give you guys a sense of the overall market and its different components in terms of industries and how they're performing, right? So now let's get into PayPal, and then we're going to tackle Amazon. So PayPal, what did PayPal do for its quarterly earnings today? Well, PayPal not having that bad of a day. They did miss by EPS, which was a significant miss, as a matter of fact, 11.4%. It wasn't all that bad, though, when we take a look at the article, and they did beat on revenue by about 2.44%. I'll remind you guys, PayPal is still on its recovery story, right? Trying to recover to a once upon a time growth story. They're trying to recapture some of that growth. Take a look at your EPS expansion, right? You can see that for the next couple of quarters, EPS growth roughly flat, even for the next 4 quarters. But supposedly 2025, 26, and 27 should be getting better for the company. The CEO said last earnings call that 2024 would be a bit of a transition year for them, and these financial metrics we got today does reiterate that as well. But the company is moving in the right direction. So let's take a look at the gist of things in terms of the article. PayPal lifts 2024 profit forecast, which is what we wanted. We want to get back to those profits. Execs focus on branded checkout growth. Oh, very interesting. So PayPal's unbranded businesses have grown, but weakness in its branded business, such as Venmo, has been central to investor anxieties. Here's what the CEO had to say, the new CEO, Alex Chris. We continue to focus on accelerating growth in branded checkout and driving the profitability of our business. We are executing to get upgrades to our core branded checkout experiences to the market. So definitely trying to revamp PayPal's offerings in their app, right? Not only they don't want to be known now as just a peer-to-peer payment transfer system. They want to be known as a business, as a company that enables small businesses to grow, similar to what Square is doing. Okay. The company's shares rose 3% after its quarterly results signaled resilience in consumer spending, while cost cuts aided margins. The CEO said this when he took the realms last October. He said that we're going to focus on profitability and cutting costs for the period moving forward, which is 2024. Nice to see them do that right now. PayPal's newly appointed management is also aiming to win back investor confidence through measures to turn leaner and by focusing on profitable growth, as I just said. Chris said PayPal has worked to instill cost discipline and is leaving no stone unturned when it comes to reducing unproductive costs. PayPal expects 2024 adjusted profit to increase by mid to high single-digit percentage compared with its earlier forecast of remaining flat. That is very, very good, guys. If we can get that profitability back up, we can then start boosting EPS and give PayPal more of a rich valuation instead of still being crushed in terms of valuation, right? We did have some good things. Total payment volume increased 14% to $404 billion in the fourth quarter. Net revenue climbed 10%. So nice beats, guys. Nice to see PayPal really coming back to double-digit growth in TPV and net revenue as well. Now, here's what one analyst had to say, and this is pretty much the moral of the story for PayPal. While the turnaround will likely take time, we believe long-term opportunities remain substantial as the company has evolved from a traditional checkout button to a robust platform of end-to-end solutions for consumers and merchants. So PayPal still in its recovery story. Where do we stand in terms of valuation here, guys? PayPal, illustrating some healthy growth, not the fastest growth, but still growing EPS double digits, 12% for the next 3 years each year. That gives them a forward PE at $67 of about 13, not that high at all. And if we take this PE ratio as an expression of their growth, they only traded a 1.08 peg. Not that bad, but if ever the market continues to unravel and we can find PayPal down here in the lower 60 range, that would give them a peg ratio of close to 1, maybe even under 1, which is a better deal for this company. But similar to a lot of other companies in the recovery stories, Nike, Starbucks, etc., this one may just take some time, so you'll have to be patient. And now we lead into our big one of the day, guys. Amazon, one of my favorite companies. What did Amazon do in the after hours? Well, as a matter of fact, they were roughly flat. Take a look here, right? In terms of how they closed, Amazon had a heck of a sell-off in the last hour of trading, selling down almost 2% in an hour of trading. Very, very uncharacteristic for Amazon in that respect. Gave them a total drop top to bottom on the day of close to 4%, but they recovered ever so slightly with very decent earnings. They're up about 1.5% in the after hour. Nothing to really scream home about, but still fantastic beats on Amazon across the board. So let's take a look at their earnings here. 16.44% beat on EPS. That is fantastic. And they had a very decent beat on revenue as well by about 0.5%. I think I forgot to do the financial. Oh no, I did them over here, guys. My bad for that. I thought I forgot to do them, but figured I did. So in terms of earnings, very decent beat nonetheless. Let's take a look at some of the headlines and you'll see that, as I was saying, leading into this earnings and leading into last earnings, this year will be a year of record profit for Amazon. Don't forget it, right? Here is the headline. Amazon profit more than triples, topping Wall Street expectations, right? Very, very good. Amazon Web Services, $25 billion versus the $4.5 billion as expected. So AWS, very big beat. Advertising business, $11.8 billion versus the $11.7 billion expected. Beat on advertising as well. Take a look at your operating income. Operating income soared more than 200%. That's a 3x in the period to $15.3 billion. That is literally revenues minus cost of goods sold equals operating income. It's not the bottom line, it's their operating margins. And usually Amazon's operating margins have been relatively thin, and now their goal is to expand them as much as possible and translate that into more net margins and more free cash flow growth. Wait till I show you the slides. It's absolutely ridiculous. Far outpacing revenue growth. The latest sign that the company's cost-cutting measures and focus on efficiency is bolstering its bottom line. AWS accounted for 62% of total operating profit. Net income also more than tripled to $10 billion. Very, very good. Amazon expects a continued jump in profitability for the second quarter, but at a more measured pace. The company said operating income will be $10 billion to $14 billion, up from 7.7 a year ago. So literally, guys, coming up on a 2x in terms of operating profits in a year. Extremely good for the business. Revenue in the current quarter is expected to be in the $144 billion range, representing growth of 7 to 11%. Analysts were expecting growth of 12%. So a little bit light on Q2 guidance, which is the reason that the stock wasn't flying in the after hours, but that profitability really makes up for somewhat light guidance. Sales at AWS accelerated 17% in the first quarter, topping the estimates of sales growth of 12%. So the real story was in their AWS growth. Amazon advertising unit saw sales surge 24%, just ahead of consensus estimates. It's the first report since Amazon started running ads in Prime Video, a move analysts predict could generate significant revenue over time. This was what we were talking about the last two quarterly earnings. I remember telling you guys it's going to be a huge segment of revenue for Amazon, right? Think of how many Amazon Prime members Amazon has. Over 150 million. And each one of those have access to Prime Video, which is basically the Netflix of Amazon. And if they use it, now they will be viewing ads. This is going to be a up and coming segment of Amazon's business. Take a look at these slides, guys. This is one of the best earnings that I've ever seen from this company. Okay, net sales is up. Amazon always grows net sales. Trailing 12-month sales are up. Wait, look at this operating income, guys. Absolutely monstrous net income increases, and this is just going to continue, guys, right? 15 billion, up from about 4.7 prior. Trailing 12 months operating income. Look at this massive increase in operating income, guys. It's absolutely ridiculous, right? Very, very good on the trailing 12 months. Take a look at your net income, your bottom line. For the past 3 quarters now, Amazon is bringing in triple what they were bringing in early 2023. Very, very good. Trailing 12 months total. Look at these totals, guys, right? So this Q1 2023 would be measuring against Q1 2022, right? So just these increases, absolutely massive when measuring over a year-over-year scale. Segment results are fine. We're not going to go over those too much. But what we do want to see, guys, is AWS, right? AWS operating income. Look at the increased efficiency from one of Amazon's most profitable segments of its business. Look at the free cash flow. Everybody kept criticizing Amazon that their margins were razor thin. They can't bring any net cash flow to the bottom line, right? Well, now they are, and that's their mindset, and they want to keep it going. Look at their long-term goal. It's written right here. Now they have shifted from expanding top line revenue growth at all costs. Now they're going to optimize free cash flow. So watch what happens to this stock. Watch what happens to the valuation. This stock is going to absolutely rip faces off in the next 2 years, in my opinion. Long-term goal, optimize free cash flows. Free cash flow now, trailing 12 months, already up to $50 billion from nothing a year ago. Absolutely ridiculous, right? So very, very good metrics by them. We're not going to go through the rest. And now look at this. Amazon's never done this, guys. Take a look. They never include shares outstanding as a point of their slides. But since they are now going for optimizing free cash flows, what do you think they're going to do with all those free cash flows? Long-term goal, efficiently managing dilution. That's another way of saying the buybacks are coming. They haven't announced them yet, but the buybacks are coming. Fantastic, fantastic report by Amazon. The good news for the company should continue into the coming year. Now, moving on to their financial metrics, guys. Is this company a decent buy at its current share price right now of around $175, $178? Well, revenue growth is very good, 10.5% per year. EPS growth, 26% over the next couple of years, guys. The EPS growth comes from increases in profitability. Look at this EPS expansion after struggling with it the past couple of years. Now they're driving money to the bottom line. Revenue is also steadily increasing. So this company, I'm telling you guys, Amazon's coming for it, right? In terms of their financial valuations, right? So their PE at 178 is about a 42.5. On its own, that seems a little bit high. But when we take that PE as an expression of their EPS growth rate, it's actually only 1.63. Not that bad for a company that is focusing on improving efficiency, cost control, and driving margins to the bottom line. I think this company will continue to outperform, so very happy on that. Obviously, the technical analysis, we'll be going over all the technicals in the later portion of the video, but that was pretty much everything that I wanted to show you guys about the earnings. So there was a lot to cover. This video will be one of the busiest videos, but after that we kind of taper off because in the futures, right, tomorrow we're probably only going to do 2 of them. I'm going to do MasterCard and Qualcomm. Thursday, we're probably only going to do Apple, right? So this earnings season is largely coming to a close for big name companies that everybody owns. So today's video was probably one of the biggest ones in terms of the earnings recap. Let me know, guys, if you prefer this format of kind of rapid fire for the earnings cycle. I know we're already 36 minutes into the video and we haven't done any TA yet, but let me know if you guys appreciated this format of earnings rundown. Would really appreciate your feedback on that. Now let's move into our technical analysis. And I've been talking a lot, so let me get some coffee and let's get into it right away. So we're going to do these quickly, guys, because we have such a big day for the Federal Reserve tomorrow, right? It could move prices in either direction. What we're looking at, guys, daily downtrend on SPY was clear as day. We were looking for the size of the bounce, right? The size of the bounce was fairly decent. Set the bulls up higher low into higher high. That's nothing new. Now we have our daily uptrend, but now we got a big red day. So what does that mean, guys? Well, it just means that we're looking for a potential daily higher low. Anything above 498, going to try and protect this daily higher low. Everything rests on Jerome Powell's shoulders, guys. If Jerome Powell is really naughty to us tomorrow, well, we could come down here and challenge these lows. If ever we were to lose these lows, we would lose the daily uptrend, and then we'd be looking on the weekly. Can we save the weekly double bottom and recapture this? Or are we just going to go for continued weekly consolidation to the downside? That's going to be front and center for our trade tomorrow. At this point, guys, if today wouldn't have gone down exactly how it did, if today would have just been a normal day, I would have said we have enough space as a cushion for Jerome Powell. But now at this point, guys, it is quite tight. We're running in, still battling with our resistance, right? Still below our moving averages, still below our previous line of support, which is now resistance. So not looking good. I'll remind you, the expectation was always for a weekly lower high. Now it's up to the bulls. Can they save the lower low? Or we just continue into weekly downtrend and further monthly consolidation. Talking about that consolidation, the month of April has now closed. So closing red does lead us to believe that potentially if the month of May starts off how the rest of April was going, we may just get a little bit further consolidation throughout the month of May before potentially resuming to the upside as the summer months get underway. That is what we've been predicting on the channel. The bulls put in a nice bounce, guys, but it might just be a little bit too little, too late for the bulls. I'm still very, very bullish on the long-term form of the markets, but short-term, still dealing with a lot of uncertainty. Still a time to be patient and go shopping for the companies that you love the most. That's why I changed up my trading style, and that's why you can see I haven't really built any long-term positions yet in the trading portfolio because of how much uncertainty is on the table right now. So keep an eye on these lows, 497, 498 pretty much. And obviously tomorrow, if we break the highs, daily uptrend continues and we continue our weekly bounce in a healthier fashion, right? So everything relies on tomorrow. But if you ask me, guys, it is really anybody's guess as to tomorrow, as to what's going to happen for price action. The best we can be, guys, is be prepared. And by being prepared, I mean, be patient. Identify stocks that you want to buy and be patient. Let them come into your levels, right? Just don't have any FOMO, especially over the past week, guys. It wasn't a time to be FOMOing into the market, thinking that the markets are coming back, right? We need to stay logical. We need to look at this one thing at a time. One thing's for sure, until we recapture the weekly uptrend in a significant fashion, we can't say that the drawdown is finished quite yet. It's been a nice attempt by the bulls, but now it's up to them to convert. And to convert, we need a higher weekly bounce, because the size of the weekly bounce, although adequate, right, 50%, is definitely not a 70% bounce, to say the least, okay? So moving on to QQQ now. QQQ, same situation as SPY in the context of a daily downtrend, now reversed into a daily uptrend, just now looking for a daily higher low, anything above 417.50, looking for that daily higher low for potential further trend continuation. If ever the bulls lose this, going to be significant. Where did we get rejected from today? You see it best on the NASDAQ, right? This whole previous area of support, this was resistance. We were pulling up into it. And my hope for the bulls was that we were able to really, come into this level a bit more rather than rejecting at it the first time we touched it. And if we would have pulled into it more, it would have set us up with a nicer bounce. Sorry, guys. I know it's a bit small right now. Let me kind of blow this up right here. So you can see the fib levels, right? We only got as high as about 50%. That's a decent bounce, but it's not a 618, which would be in this area, and it's definitely not a 782 bounce. So it was a good bounce, but it wasn't a bounce that guarantees that the bulls are ready to really turn this thing around on the weekly time frames. So we'll be looking to the bulls protect this low right here tomorrow. If ever we lose that, then it'll be up to them to protect these lower lows, guys. If not, just going to continue in this weekly downtrend. That's for the NASDAQ futures. QQQ looking exactly the same, right? So just keep our eyes peeled on that. If ever we do continue losing levels on the QQQ, your big tech names are going to start coming into sale areas, right? Think Meta, think Microsoft, think potentially even Amazon, right? Remaining a good deal. A lot of companies, good companies, Apple as well, a lot of good companies, AMD, are on sale right now, and they will continue being on sale until we can reverse these weekly timeframes in a significant fashion. And as of now, that is still not done yet. We're still in a kind of an in-between zone, right? A lot of uncertainty still. Now moving on to XLF Financials. XLF Financials breaking down. So we were trying to look for the daily higher low right here. Still no true recapture of the hourly uptrend at any point. So technically speaking, we are still on the hunt for a daily higher low right now. The only negative part is that now we're back below our daily moving averages as well. So we're still looking for that daily higher low, anything above 39.53, looking for the bounce attempt by the bulls. The bounce attempt will be displayed by a gain of the hourly trend, something that we have not had this entire time of consolidation. Still hunting for that, closing below the 50 MA, not looking too good right now with that 12 MA close, but still a decent amount of space. Tomorrow with Jerome Powell will have a heavy impact on this sector as a whole. And for every rich reason, guys, we take back too much of this move, sets up the bears nicely for the lower high into lower low, and that would just be a continuation of a potential weekly downtrend into further monthly consolidation as well. On the monthly, guys, right, we're still just looking for that monthly consolidation coming back into our prior all-time high areas. So still a nice, very bullish monthly uptrend. But the month of May, even in QQQ, sorry, I didn't do it for QQQ, even QQQ may just be due for a little bit more monthly consolidation before resumption of that trend. Now moving on to XLV Healthcare. XLV trying to put together a bounce, but got unraveled by the rest of the market. So daily downtrend, bulls with a nice engulfing move, set the higher low, and we were moving on to the higher high. But now the bulls kind of coming into a little bit of resistance, right? So it remains to be seen, can we break 141.50 tomorrow? If we do that, set the daily uptrend, it means that your weekly bounce is starting to get underway. As of now, still no weekly bounce because we never set the daily uptrend yet. If it just flags like this at the bottom, guys, it will be a weekly bear flag for potential continuation to the downside. So not looking the best on healthcare. Healthcare still in an overall weekly downtrend already, just expecting the lower high. So the bulls as of now, very weak, guys. The size of this bounce in relation to this move right here, very, very weak bounce. So not looking the best for the bulls, but they haven't lost the game yet. That would be a loss of 139.25. So let's keep our eyes peeled for that. If they lose that tomorrow, we are likely going to get the continuation of some weekly follow through to the downside. On the monthly though, the monthly not looking terrible, still in a nice monthly uptrend right here, still looking for that monthly higher low and coming down into this big area of support right now. So the bulls should be able to put up a significant fight in this area for potential resumption of that trend later on in the year. Now moving down to semiconductors. So semiconductors obviously tomorrow will probably open very red. A lot of red components, AMD, SMCI, even a few other ones like ARM. ARM even dropped in after hours trading as well. And I'm pretty sure even NVIDIA even had a little bit of a tumble in the after hours. Yeah, even NVIDIA down about 2% in the after hours. So semiconductors tomorrow probably going to open red. So you guys can see now that the size of the bounce was key. We got a very decent sized bounce. We were in a daily downtrend. We got a nice bounce. The bulls set the daily uptrend anew, and now we need to protect these lows right here. 205.80, still looking to set a new daily higher low and really try and smash above this, try and recapture even more of this move. On the weekly move was a fairly decent recapture, weekly downtrend. So who started it was this guy right here. In terms of the weekly bounce was decent. We got a 618 bounce. Now it'll be up to the bulls, guys. If we were to lose these levels and head back into a daily downtrend, the bulls need to protect these lows down here with their lives, 199 to save this and potentially set up for some weekly consolidation into a new weekly uptrend and really put an end to this monthly consolidation. But if the bulls can't keep it together, guys, and we just roll this over into a new daily downtrend and lose the weekly, well, your monthly consolidation will continue at this point. And I've already said on the channel, we might be targeting that 180 mark, the monthly 12 EMA that we've tagged a few times in the past in the context of an overall bull trend. You can see that come down, almost tag it, come down, almost tag it, almost tag it. Now we're very far away from it, right? So it could be an interesting trade if ever we continue plunging down in this area. That would likely be your bottom for semiconductors as a whole. As a whole now, guys, the bulls still in control, but losing ground a little bit quickly. So we need to keep our eyes peeled, still in a little bit of a mixed situation in between our time frames, right? Now we're in a weekly downtrend, but in a daily uptrend, right? So the size of the bounce is key. The bounce was good, but the bulls still not out of the woods yet until we can reverse this weekly downtrend into a new uptrend. So it's up to the bulls to protect all this work that they put in over the last week and a half. Now our two last indexes, IWM Russell. So IWM Russell down 2.03%. And this is what I was saying, guys. The Russell just not going to participate on its own. It's largely participating as a byproduct of the overall markets. So IWM coming down significantly. Nice daily uptrend here, but we are at risk of losing it. If we flush 193.78 tomorrow, loss, and then potentially further flush, which will just continue this weekly move down. If my chart can possibly reload here. Give me a quick second. Maybe I've been going through these too fast. It's actually froze, guys. I think we did it. I think we actually crashed TradingView because of all the red on the charts right now. So let's just reload that real quick and we'll get right into it. All right. So in terms of our IWM Russell, that's StarBucks. That's not IWM. So in terms of our Russell here, guys, not looking the best, right? So that will just perpetuate our potential weekly downtrend, right? Further weekly consolidation and then potential furtherance of monthly consolidation as well. Got to be careful though. The monthly higher lows are down here, 188.83. If we do come down there and break them, we lose the monthly uptrend that we've been setting over the past 5-6 months. Would be significant. This one is beholden to interest rates, guys. Until interest rates start coming down, I don't believe the Russell is going anywhere. We're probably just going to get stuck in the same range we've been stuck for the past 2 years at this point, 195 down to about 171. So I'll be keeping an eye on this, but really no urgency for this trade as a whole. Now moving on to the Dow Jones. Dow Jones not having the best time today at all, guys. Very, very hefty sell-off. So we were in the process of trying to get a daily uptrend going after having been stuck in this daily downtrend pretty much since the early or the late part of the month of March, right? Almost a month and a half at this point on the Dow Jones, now coming dangerously close to the 37,500 level. If we were to lose this level tomorrow here, guys, well, unfortunately, daily downtrend simply continues. And that would be a weekly downtrend for the Dow Jones. But will be very significant here, guys, right? We haven't lost the weekly on the Dow Jones since last fall. So just goes to reiterate what we were saying at the beginning of April, guys, when this consolidation happened, very likely lower highs into lower lows for some extended consolidation similar to last October. That's why I pivoted my trading style. I'm very, very bullish on the overall markets, but I do feel that this is much needed consolidation after 5 months of rally, and I still won't change my tune on that. So if we break these, weekly consolidation is underway, which would just lead to weekly downtrend would be underway, which would just lead to very healthy monthly consolidation towards the end of 36,900 down to about 35.5. A lot of space for the bulls to set a higher low in the month of May before potentially resuming the uptrend later on in the month of June. So all of your indexes looking pretty much the same here, guys. We were looking for the size of the weekly bounces. Some of them were good, such as in the case of SPY and QQQ. They were good, but not amazing, right? And other ones were very weak, like XLV, very, very weak. Dow Jones as well, very, very weak. So not everything is cooperating, which just goes to show a lot of uncertainty in these markets still, and could set the tone for further consolidation. Yields as well, still on the increase here, guys. Still no clear diminishing times in yields right now. The 20-year yield still around 4.9%, still elevated. The 10-year yield almost 4.67% as well. So very, very bad time for yields right now. We'll see what happens with Jerome Powell. If Jerome Powell is kind of naughty with us tomorrow, expect these to once again have another little bit of an update. Still just looking for these yields eventually to subdue and start curling over in the later part of the year when we get closer to those interest rate cuts. Now, let's move into Bitcoin and Ethereum very, very briefly because they had a big day today. So Bitcoin was trying to set up for the daily trend change attempt, right? We had a daily downtrend right here. The bulls put in a nice engulfing move. We're trying to set up the daily higher low for the trend change, and they lost it today. So unfortunately, new daily downtrend on Bitcoin. So at that point, guys, your weekly downtrend simply continues as well. And now our next area of support is about 58,000. If we break 58,000, guys, the next area of support is all the way down here, 52. Came up a few times in the past, but that's just where the cookie will crumble at that point if we come down there. In terms of our monthly, guys, monthly as well, looking like some monthly consolidation is now underway. Monthly candle completely engulfing last month's candle. Usually when that happens, we do get some follow through continuation to the downside. So keep your eyes peeled if we do dip down into the mid $50,000 range. Could be a decent buying opportunity for an expansion potentially later on in the year. Now, moving on to Ethereum, but the bulls still haven't lost our last line of defense, so they can still mount a potential recovery story. We're not too far from it still. I would get a bit more nervous if we were to lose this 58 zone. Moving on to Ethereum now, same thing as Bitcoin, right? So Ethereum really was trying to do the same thing. Daily downtrend, trying to mount a new daily uptrend, and they got flushed, right? So loss of the lows, we are now back. The bears are trying to gain control right now. If they set the lower high and lower low, new daily downtrend, and just continuation of this weekly downtrend as a whole, that would be a loss of 28.64. Continuation of the weekly downtrend that's been in motion now pretty much for the last almost 2 months at this point, right? And on the monthly, guys, just looking for extended monthly consolidation. I've said on the channel once, I'll say it again, 27 down to 25, my preferred range for buying Ethereum for the potential next leg up further on in the year. So crypto going through a little bit of a consolidation phase since the month of March. And that's really no secret, guys. Crypto moves with the rest of the market. You can see when this consolidation started on crypto, which was pretty much the early portion of March. It's the same time that the S&P, right, started hesitating here at the highs, and especially your high-flying technology sector. That's exactly where the QQQs stopped out and started curling over. So Bitcoin and Ethereum really following the rest of the market in that respect. Now let's move into our big tech names. Give me another quick second. A lot to cover in this video, right, guys? And then at the end, I'll do my trades, but we'll go through those quickly. So in terms of Apple, down about 1.83%. Not a very good day for Apple. They were actually holding up decent until the last hour of trading. For some reason, the last hour, it wasn't even the last hour. As a matter of fact, it was the last 15 minutes. Everything just fell off a cliff. No news, just very, very heightened timidness, heightened anxiety over tomorrow with Jerome Powell, right? So Apple was trying to reset this daily uptrend. We were saying the bulls created a lot of space off the lows to set up for potential earnings. Earnings are Thursday, so we only have 2 days of trading remaining before earnings. We have created still, even with today's drop, we do still benefit from a little bit of cushion before us and these lows, 3.6%. The expected move on Apple is about 4% up or down at this point. So we do have a little bit of cushion there, but the bears took back a lot of the move here, guys, right? So still looking for the bulls to set up for the higher low for the potential trend change. If earnings are going to be bullish, we will get that daily trend change. If earnings are bearish, we're probably going to roll over, retest these lows. And if we break these lows, guys, well, that would just be continuation of our weekly downtrend. And the next area we'll be targeting will be that 155 down to 150. That's where your 200 weekly moving average is. And Apple hasn't lost that 200 weekly moving average in the last 15 years. Much more solid area of support if ever we flush through these levels right there. That is where I'm going to be looking heavy to buy Apple once again. So looking forward to see what they have to say on the earnings, guys, for this quarter coming up, but not a lot of price action that we can determine before those earnings, guys, right? The best we can do is hope that Apple puts enough space between us and these lows right here and keeps that space over the next 2 days. If they get too close to this area, guys, and they have negative earnings, the flush is almost guaranteed. Now moving on to AMD. So we covered AMD earnings already. Now let's just go over the technicals. So where does AMD stand in the after hours right now? We're down to about 145. So 145 is literally right around here. What is also down there? Your 200-day moving average, that green line right there. And we're coming up on the area of support that I highlighted on the channel over the past 2 weeks. 143 all the way down to about 133. This previous little pocket right here. I know it's not the strongest area, but it is the next area that we're coming up on. So could get a little bit of a bounce from this area right now as we're coming in probably to oversold conditions, right? We're going to come into short-term oversold conditions in the near-term future. So could be a little area to bounce for AMD in that zone. But overall, guys, we are still in the context now that we have rolled over. The bears have now recaptured this. We were trying to set the daily uptrend. That has now been lost. So we're going to try in this area. Now we have to start from step one, guys. We lost the daily uptrend again. So now the bulls need to once again reset the daily uptrend and then make an attempt once again at try to reverse some of this weekly damage. It will take some time for AMD, in my opinion. No rush to buy this stock, right? So if you want to be accumulating some positions, slowly DCAing into the company as it moves down the levels, that would be the smartest decision, in my opinion. In terms of our monthly chart here, guys, still trying to set a monthly higher low for further trend continuation. The monthly higher low, in my opinion, most likely will come in this area, 140 down to as low as probably maybe even 120. If the markets really start coming down hard, could see a spike down into that area. Would be a tremendous buying opportunity because the company's best years are still ahead of it. Now moving on to Amazon. So Amazon, we covered their earnings as well, but we didn't do the technicals. So where does Amazon stand? Well, really no change in relation to yesterday, right? So Amazon currently right now, 177. So still just chilling up here, right? We haven't really lost any key levels. The area that we need to watch out for is 166.84. Anything above that, just looking for the daily higher low for further trend change. Now, it becomes a little bit complicated here, guys, because if tomorrow's candle opens inside this candle, it will not be a considerable event, right? It'll still be part of this daily consolidation. What we need to do is set that daily higher low, reverse this hourly trend into an hourly trend change. Then we can say our higher low was set with the low of today and try and recapture this daily uptrend, right? That's what we're trying to do. Daily downtrend, engulfing move, trying to move into that daily uptrend. If for whatever reason we come into this lower area, this is a juicy area of support, guys. 173 down to 169, right? The bulls are going to put up some defense here, so the bears will have their work cut out for them. In terms of the weekly will open somewhat standard to here as well. We haven't really lost the weekly lows as of yet, but this area going to be crucial to protect for the bulls. Unless if we do lose that and close below here, guys, and lose this low and close below it, that will be a weekly downtrend in motion for Amazon and will set up for a little bit of healthy monthly consolidation. At that point, guys, 160, 150 is going to be the key area that I'm going to be going shopping very, very heavy for Amazon. If it gets dragged down with the rest of the market, it won't be because the company's performing poorly. It'll be because the rest of the market is performing poorly. It's one of my favorite companies to buy right now. So looking forward, if I do get an opportunity, 160, 150. Don't know if that's coming because as of now, the bulls still do control your short-term timeframes. Moving on to Google now. So Google also not performing good today, 1.94%. Really, Google, ever since its earnings, right? Just straight down, now taking back 7% of the earnings move. That was to be expected here, guys, right? Very, very nice earnings beat. The rest of the market not performing too well. So now Google is coming down, still trying to set the daily higher low for potential trend continuation. But now we're running into a bit of an issue here. The bears have taken back 50% of the move. If they take back too much of this move here, guys, we could end up in the best case scenario for the bulls, in a tightening range until the market sorts itself out. The worst case scenario is if we take back too much of this move, lower high, lower low, set the daily downtrend, and then we just be looking for further and further weekly consolidation on Google stock. So Google stock, the bulls are still in control right now, but I'd be very wary if we start really taking back too much of this move. This area right here, 160, 161, is going to be our first line of defense. Your 12 EMA is there as well. That will probably be the bounce zone. But then again, after that, do they set the lower high and flush this area and send us into weekly consolidation? In my opinion, it won't be anything related to Google, guys. It'll be the overall market. So if SPY and QQQ start setting weekly downtrends again, expect Google to flush down as well. Now, in terms of the monthly is looking very healthy in terms of your monthly close, right? Anything right now, any consolidation, anything above 132, just going to be for a very healthy monthly high or low for further trend continuation. We have all this area, guys, the previous all-time highs, right? I might as well move this box up right here, right now. So we have this whole area of our previous monthly highs for Google, right? Previous all-time highs. That I don't think the bears are going to be able to get through very easily. If anything, we just come down in here into the month of May to set up for the glorious trend continuation the rest of the year. So Google, not looking too bad, but still heck of a drop after earnings. Now moving on to Meta. Meta still just struggling at the lows right here. So no real new developments on Meta, still in a daily downtrend. The bulls, right, trying to reverse this into a new daily uptrend, but not looking the healthiest. We cannot regain the hourly uptrend yet. So as long as you don't see an hourly uptrend forming up, the higher low is not set, right? And the size of this bounce, I'll remind you, the size of this bounce was not very good. The size of this bounce was only about 30%, very weak bounce. So if ever the markets roll over tomorrow, expect Meta to try and revisit potentially these lows over the course of the week. And then if we flush them, daily downtrend continues. Weekly also will be weekly, heavily engulfing move to the downside. It's not a downtrend. Downtrend would be lower high and lower low, but still heavy weekly consolidation. Definitely loss of the weekly uptrend at this point. To recapture it, we need the two-step process. That's going to take some time for Meta. And if Meta gets dragged down with the rest of the market, even though their earnings were fantastic and I love them a lot, well, we may just be going for the gap fill, guys. 400 level is going to be that line in the sand that we're looking for Meta stock. The big support zone, though, even at 400, we don't really have much of a support down there. The big support would be around 380 to 360. That's a stretch, though, for Meta. I'm really not sure the company's going to come down 30%, all the way down to 33%. It might, but I would be highly surprised. If anything, I do think we may just go for the gap fill if ever the rest of the market does not cooperate. So as of now, the bulls really need to put their butts in gear and try to get this hourly trend back so that we can save these lower lows and try to get the daily uptrend going and start recapturing as much of this weekly move as possible to set us back on track on the weekly. Now moving into Microsoft. Microsoft down 3.21%, guys. Big tech really falling off a cliff, right? So tried for the daily trend change, engulfing move by the bulls right here, undone in 3 days of trading. So Microsoft's been look at the size of these candles in relation to the size of all previous candles, right? Very volatile market conditions right now. So daily downtrend right now is currently back underway. Even though we haven't flushed these lows here, guys, today, the daily downtrend is clear as day, in my opinion, right? So flush of these support zones right now, 398 to the downside, which leads us to believe that our weekly moves have now, unfortunately, been lost by Microsoft. Weekly downtrend in motion. If the week closes like this, watch out. That would be Microsoft's first weekly downtrend since last fall as well. Last fall, Microsoft, top to bottom, had a sell-off of about 13%. Now, top to bottom, Microsoft is down about 9%. 13% would put them right at our previous area of support, 377 down to 365. That is where I personally want to be picking up some shares of Microsoft if we do visit that area. So now the bulls definitely have their work cut out for them, guys. We're going to be looking once again, can the bulls make a bounce attempt? And if they do, they have their work cut out for them. The moving average is now above us, and the resistance line, 398, also above us too. So we'll be keeping a close eye on how Microsoft stock evolves over the next few days of trading, but definitely look like the bulls do want to get that first weekly downtrend in motion right now and try and revisit this lower area. The monthly also shows the same thing. Month of April closing very much red. And now we are potentially looking for the monthly consolidation move into our lower bound of support down here for a beautiful monthly trend continuation the rest of the year. Now, moving on to Netflix. So Netflix also suffering today, 1.56% to the downside. This looks exactly like Meta, right? So daily downtrend leading into a weak post-earnings bounce and then just struggling at the lows. What does this look like, guys? On the lower time frames right here, consolidation towards the lows. That is unfortunately a bear flag, right? So when you cannot even bounce 30%, 38% of the move, and then you consolidate at the lower end of the move down, that is a bear flag, usually tends to lead to more bearish continuation. So if ever we break 543, that would be daily downtrend continuation, and would also be a weekly first downtrend for Netflix for the first time since last fall as well. Netflix last fall, top to bottom, fell pretty much 25%. A bit of an overdone fall in my opinion. Now Netflix is down about 14%. If we come into my buy zone, that would be about 20%. That's about the 500 range. 500 range, guys, would be pretty much filling last earnings gap. I know it's still a considerable ways down, but same situation as Meta, right? These charts almost look the same, where we're trying to undo all of these gaps that were previously set, would undo a lot of the growth story, but would put these companies at a lot more fair valuations. So that's where I'm expecting the damage to maybe stop on Netflix. For now, the bulls haven't lost everything. They would need to put in a reversal pattern soon though, especially on this hourly time frame, and get a daily bounce underway and start recapturing this daily uptrend, guys. But a lot of resistance above us, 575, the horizontal resistance, and our moving averages as well above us right now. Not looking the best for Netflix. If we do come down here 510, 500, I will definitely be looking to make a play on this stock. Now, moving into our NVIDIA stock. So NVIDIA also coming down on the day, 1.54%. Really everything coming down on the day except for PayPal. So NVIDIA, right? NVIDIA had recaptured the daily uptrend nicely. Now potentially starting to revisit these lower levels. We'll see how NVIDIA opens with AMD and SMCI down tomorrow in the morning. NVIDIA, obviously, your market leader in that. We are above support, so all is not lost for NVIDIA right now. 850, we're still above the 850 mark. We're still above our moving averages as well. So the bulls are now just looking for a daily higher low for trend continuation. I'll remind you, the move on NVIDIA has been very healthy so far, right? We've recaptured a lot of last week's move, but in terms of the overall week move, we've only really recaptured about 61% of the move. It is adequate. It's not the best, which would be 70+%, right? But it is very good. If NVIDIA bulls can defend this location right here, even if we were to lose this in the next few days of trading, I need to see them protect these lows, 762, get this as tight as possible to maybe then explode on their own earnings, right? That's what we're looking for NVIDIA, but obviously anything goes tomorrow, guys. Continuation of semiconductors earnings, SMCI, AMD to the downside, and we also have Jerome Powell, right? So a very, very red day would cut deep, and remains to see, can the bulls protect these higher lows? 782.75 for the daily higher low attempt for the daily trend continuation. If ever they cut back too much, it leads into potential case of a rollover, and then we'll be looking to the bulls to really protect this with their lives and try and tighten this up for the for fear of potentially losing into a first weekly downtrend. That would just be further and further monthly consolidation. So NVIDIA still looking good, but need to be aware of what would happen if the rest of the market continues unraveling. Now moving on to Tesla. Tesla, after such significant gains over the past couple of days, now taking a little bit of a breather, 5.5% to the downside. Really not that much in comparison to our most recent move, right? So what are we targeting on Tesla? Well, I'll put it right here. We are targeting this level right here for Tesla, okay? Very, very obvious level, right? So we need to see this hold up. Previous support, previous resistance here should be acting as support. Our moving averages are going to be there as well, right? So need to see the bulls right now put in a daily higher low and confirm this trend change. We still have not confirmed the trend change. It's been a glorious move up. Now the bulls need to confirm the trend change. Could be pulling down here into the 175, 170 pocket. There's a gap to be filled there. Our moving averages are there as well. We have a lot more support in this area as well. So something like this could potentially be expected. But if ever the bulls give back too much of this move and the markets continue unraveling, it sets up, unfortunately, for the lower high, use this area as resistance, and then maybe even continue daily downtrend. I don't want to get ahead of myself, but those are just the two likely scenarios depending how the market evolves. In terms of the weekly is looking fairly good, guys. Heavy weekly downtrend, and now the bulls have engulfed your most recent weekly move down right here, creating a ton of space that even if we lose the daily uptrend right here and trend down over the early parts of the month of May, well, we have a lot of space between us and 140 lows, right? A lot of space to set the weekly higher low for further trend change. That weekly trend change though, guys, it takes some time, right? Can take up to over a month. In terms of the monthly not looking too bad. Heck of a doji candle close, so looking good in that aspect. But keep in mind, guys, it is still a monthly downtrend. And to reverse this to a monthly uptrend, it takes a lot of time, months and months and months, right? So could be in the bottoming process for Tesla, but no rush for this stock, in my opinion. Nothing they said on their earnings call recently gave us the impression that their next 2 quarters at least are going to be better than this one we had right now. So a lot of optimism for 2025 for the company, but 2024 still going to be a tough year for them. Moving on to Palantir now. So Palantir initially was doing okay on the morning, but then just got dragged down with the rest of the market. So Palantir, I'll remind you, we were in the context of this gorgeous new daily uptrend. Now, any move lower, just going to be looking for a higher low, anything above 20.7, daily higher low for trend continuation. If we take back too much of this move, sets up the bears once again, lower high, lower low, downtrend continuation. And we were always looking, guys, for the lower high on Palantir as well, right? I know it's very, very ugly on this chart, but it's right here. You kind of see it better on the daily time frame. This 24 level, really, really, really sticky level. That is the area of this weekly downtrend, right? The most recent move on the weekly downtrend. So we'll be looking, can the bulls protect this move, right? They've put in a great move over the course of the last week, a lot of space created off these lows, but if the rest of the market falls apart, well, they have earnings next Monday. So if we come down too close to this in the next 2 days of trading before the Monday session, if ever Palantir delivers good earnings, but for some reason the market reacts negatively to them, as we've been seeing a lot during this earnings cycle, well, we may be even flushing these lows down to about $20. That will be a very juicy buying opportunity for Palantir, in my opinion. The lows of this support zone, right? Previous resistance, that would be these lows around the 19.50 range. This is where I want to be picking up the company, looking for the monthly higher low as well on this chart in this whole location right here. Company is looking very, very solid. One of the only pure form AI plays out there. So only a couple days of trading remaining before then. So tough for me to say whether or not we get continued price action to the upside or to the downside. It won't matter, guys. Palantir usually moves 10+% on every given earnings. So what the best we can do is set us up with enough space between us and these lows. And so far, we still do have a decent amount of space, about 7.5%. So need to see the bulls maintain as much as that as possible prior to these earnings. And now lastly, we have PayPal. So PayPal, we covered their earnings on the channel, but we didn't cover their technicals. So in terms of the technicals here, guys, well, we got the breakout, right? We got the breakout all the way up to 70.5, but the company could just not hold on to gains because the market literally fell apart, right? So big engulfing move by the bears at this point, right? Remains to be seen tomorrow. Can we change this back into a hourly trend change? If ever we lose this hourly downtrend into tomorrow, continued fear in the markets, well, your daily pullback will be underway. Now the bulls have a lot of space though, and we are above key levels right now. Our new area of support becomes your previous 52-week highs. Think 68 down all the way pretty much. Well, this needs to be a little bit lower, down pretty much all the way to about $66. So a decent amount of runway for the bulls to work with, right? Just looking for a daily higher low for potential continuation. If the bulls give back too much of this move because the rest of the market is unfavorable, then once again, we may just be plunged into further extended consolidation, come back down into all these moving averages, and that could represent a better buying opportunity with our renewed profitability guidance by the company looking very good. But so far, it is still a temporary breakout right now. You can see that best on the weekly as well. Beautiful, gorgeous weekly breakout pattern. But if the rest of the market doesn't cooperate, guys, PayPal will undoubtedly give back a lot of these gains because the company is still in a transition year, right? It didn't say that it was going to grow exponentially this year to require market-beating performance. It just said that although it's improving costs, improving efficiency, improving margins, still going to be a little bit of a transition year for the company. So that's everything I had for you guys in terms of technical analysis. Hope you guys enjoyed that. Now let's take a brief look into my portfolio, see the trades that I have going for tomorrow. All right, guys, so in terms of the portfolio, so let's recap yesterday's trades that we took for earnings. All of them very, very profitable. We actually did not take any losses, about $370 in realized profit today. Very good day. So let's start off from the top. We had the Logitech 70 puts. We wrote those Logitechs yesterday for, I'll just bring it up again. You saw those yesterday on the channel, right? We wrote them for 77 cents. We were able to close them for 19 cents today. They're monthly contracts, right? So a lot of time left on those contracts. I closed them for 19 cents. So a good little gain on that position. Second, we had McDonald's 262.50s. We were able to close those at a nice gain as well. Take a look here. We wrote them yesterday for 70 cents and we were able to close those very decent for about 9 cents in total premium value, right? for the day. So very, very nice gain on McDonald's as well. Not quite worthless, but still a very decent gain for one day of trading. Now, moving into the next one, guys, we were looking at Meta. The Meta 415s that I had yesterday, I had a decision to make. I wanted to play MasterCard, right? And MasterCard is roughly $400 a share. Meta's roughly $400 a share. So I had a decision to make. Do I keep Meta for the rest of the week, or do I try to make a one-day play on MasterCard, get out of MasterCard and get back into Meta? Well, I chose to do the latter. So we closed that Meta trade yesterday. We wrote Meta for a juicy amount of premium. Meta, we wrote it for about $2.08, and I closed that midway through the day when I was looking at earnings plays. We closed that for about $1.10. So roughly about 50% profit, about $100 in profit. Very decent position on Meta. Happy with the way that trade played out. And we replaced it with MasterCard, which we'll get into later. Then we obviously had the NXPIs, 222.50s. They did very good on earnings yesterday. So NXPI, we wrote those yesterday for, let me show you guys, 60 cents. We actually closed them today for pretty much worthless. You can see that higher on in the charts right here. So NXPI closed almost worthless for about 5 cents, pocketing most of the profits. And that's pretty much it. The PayPals as well, the 58 puts, right? We closed those. We had those yesterday. I think we had 2 or 3 contracts, if I'm not mistaken. We had 3 contracts, 25 cents a pop. We closed those this morning, worthless for about 2 cents. Very, very good. All of these working in our favor. Now, what do we have on deck for tomorrow? Well, we have a couple of them. So SoFi didn't change. I'm going to keep these till Friday, see if we get assigned or not. I like these levels on SoFi, so I'm keeping them. Now, in terms of Caesars, we wrote Caesars 33 puts before earnings. Caesars actually, they didn't have a great earnings, right? They kind of missed on earnings across everything. But as a whole, guys, the stock is still around $35. So I really don't think there's any chance maybe of me being assigned at 33. That would be a significant drop from even these levels right here, right? Another 6% to the downside. I don't see that happening. Should be able to close these for a profit tomorrow. We got 20 cents on those. We'll see how we can close them for tomorrow. We wrote the AMD 140s for 60 cents. So we'll see. AMD right now about 147, 148. I'll try to close these tomorrow as well for some profit. We'll see how much we can get. Amazon 162.5s and 165 puts. We got juicy premiums on those. $1.40 for the 162s and $2 for the 165s. If Amazon opens exactly where it closed in the after hours today, right? The high 170s, these should prove to be quite worthless by tomorrow morning. Should be able to close these for 80, 90% profit. Looking forward to that. Then we have Caesars, another 32.5. Probably be able to close that as well. This one's a bit lower. Going to try and close this for as much profit as possible. So all of these so far doing fairly well. MasterCard, we have those for tomorrow morning. I wrote the 430 put for $1.04. We'll see how they go, but American Express and Visa performed very, very well on their earnings. For dip to 430 for MasterCard from current price, guys, would only be roughly about a 4.5% drop. The company's earnings is predicted to drop about 3.3%. So it's not really 2% the expected move, but 430 is at your 200-day moving average. So I'm expecting a little bit of a reaction there. Not a huge support level either, but for some which reason, guys, I'm just very confident in this MasterCard trade. I could be very, very wrong. We'll see how tomorrow goes. I do expect them to beat, and the company's just so consistent, right? Already currently down from its all-time highs, about 7%, and coming down all the way to 430 would be about 12%, right, off their all-time highs. Significant drop for MasterCard, so looking forward to see how that position evolves. We'll tackle that tomorrow when we get to it. A little bit of a chance on that one, right? And then we get to Starbucks. Now, Starbucks, guys, I literally told myself, I asked myself for 5 minutes, do I play Starbucks? Do I not play Starbucks? You guys obviously know that I got caught up on Starbucks last earnings cycle, pretty much in the month of actually, a matter of fact, I think it was July that we got assigned our Starbucks, right? We started riding it down this whole time and trying to recapture premium. It was either that one, it was either this earnings here, or it was shortly after this earnings right here. I'm not too sure which one, but we did get assigned roughly around the $100 mark, and then we had to kind of ride it down. And I told myself, the trade is out of favor, but the company last quarter did say that they were on a recovery story, right? China sales were looking up, so I was expecting the brand to deliver on that turnaround story. And they effed me, kind of like Nike effed me as well. So now moving forward, guys, I'm just not really touching the consumer discretionary trade moving forward. It's just, you're kind of swimming against a waterfall at this point. You're trying to swim upstream against a waterfall of downside, and I'm just not here for it anymore, right? So at this point, in terms of a long-term buy, great. But in terms of swing trading and trying to get in and out of positions as quickly as possible, I just don't think it's a very good area to be in. So I'm just going to stop trading it. I made one last attempt to play Starbucks one last time, right? One last time for the memories. Love the company, but the company's not been performing to standard in the past, 2 years at this point. Down to 78. I wrote right here, you can see it right here, guys. I wrote the 80s and the 81s. Didn't even get that much premium for it, and this was significantly away, guys. The company was only expecting about a 6.5% move on earnings. I literally wrote 10% away. It was at 88 before, so roughly 9 and 10% away. Still wasn't enough for the company. So probably tomorrow, guys, if we do get a little bit of a relief bounce in the morning, coming up to maybe the 79s, 80s, I'm going to be closing these. I don't want to keep them till Friday. I'm just going to take the loss, take it on the chin. We got a couple of losses last week. It's part of the game here, guys. You win some. Well, in the case of my strategy, you win most, but you lose some. And sometimes those losses will sting. This will probably be $300-$400 loss, which does literally eat away today's entire profits, but at least we have some decent profits moving into tomorrow with all those positions that we have currently active. Those should make up for, a lot of the Starbucks losses, right? So looking very decent, happy with the way we've been trading so far. Very, very volatile day in the markets tomorrow. We'll see what we can get. Tomorrow, I'm probably looking to play some earnings as well. Probably going to play after the close. Going to be looking at maybe Qualcomm to be playing, maybe even some Etsy. I'll be very conservative on Etsy because it's consumer discretionary as well. And if I can't find conservative enough strikes, I just will not play it, guys. On Etsy, I'll probably be looking 15, 20% below current strikes. If there's not much premium there, I just won't trade them at all. And then on Thursday, guys, and I may just, if MasterCard can close worthless, I may just re-enter my meta trade for the remaining 2 days. That's what I'll replace a lot of the value with, right? And then Thursday, we're going to probably be doing Apple, that's for sure. And the rest I haven't really looked into, guys, but at first glance, maybe Bill.com, maybe Cloudflare, Fortinet, Cloudflare, probably the two that I'm going to favor, and Expedia down here, you can't really see it, but I want to do those as well. So those will pretty much be the ones for the Thursday sessions. Hopefully today's video was educational for you guys. Keep a very close eye on Jerome Powell tomorrow and how we react to his decision. And if we hold these higher lows on the daily, if we roll them over, it just means that our weekly lower high is set. And then we look for the bulls to protect these. If not, we just continue healthy weekly consolidation, healthy monthly consolidation. We've been literally saying this exact scenario could happen on the channel, guys, for about a month and a half. So I hope nobody is surprised. Hopefully this video has been educational to you. If it was, consider dropping a like for the algorithm. Would really appreciate it for the growth of the channel. And also consider subscribing to the channel if you're new. Would love to have you here. And as always, if you have any questions at all, please feel free, leave them down below in the comments. I would love to answer. If you want me to look at a specific stock, technical analysis, an options play you're considering, let me know, and I'll be very happy to answer you what I would do down below in the comments. So take care, guys. See you tomorrow after the close, and peace.